Hello everybody, it's me the Boss Hog, and today we're going to be looking at my stock portfolio for the last 2 weeks. Due to not being well last weekend, I didn't get to do one, but I'm very excited to bring you quite a lot of movement. And yeah, let's have a look through that now. Alright, so it looks pretty ugly here, to be honest. Pretty difficult September to date. I did have a look and compare to the market, and September's been a difficult month for everybody, I think. So it looks like I've slightly underperformed the S&P 500. That's mainly because my largest holding is American. It's given up a few percent, so that's dragged everything else down. The FTSE I'm actually slightly overperforming, and that's mainly because Fever Tree, which we'll actually touch on in a minute, produced some good results and shot up like 10% in a day. That's a top 10 holding for me, and that kind of supported my some of my FTSE shares that didn't do so well. So I'm trying not to overthink it. It was pretty brutal. September apparently is often a bad month. It's my first September investing. So yeah, I'm trying not to overthink it basically. I would say I think I picked up some really great value shares, especially in the UK market at the moment. I think the UK market in general is quite undervalued, and I think some of the shares I picked up were good value. I have a new position that I want to talk about a fair bit, where I went pretty big, pretty hard after some results in line with expectations caused a over 20% share price drop. So I went in hard, and I have some other shares as well that I'm just excited to build a position in over the last month. My capital over the last couple of weeks added is just a smidge under £1,000. That's mainly because I have two ISAs, my own ISA and my wife's, that I oversee. My ISA is already topped up. I need to decide what we're going to be doing with the investment, but for now I've basically just left it as is. And so we've only been adding into one ISA during that period, so a bit lower than normal. Dividends this month are really exciting for me, depending how quickly my brokerage can process some dividends at the end of the month. It may well be a record breaker, but either way, I had two very big dividends. One from Phoenix Group, which is a closed life specialist insurer. I think it's actually a little bit undervalued still, but it yields really well. And a iron ore specialist miner called Evraz, who at the moment, and their share price is yielding like 13%, and has, it's a double-digit yield for the last many years. And I'm very bullish on Evraz. I've actually got a video about it, arguing why it's better than Rio Tinto. So both of those are very big additions, and so yeah, that actually helped a little bit in terms of performance. But yeah, anyway, the main purpose of this video and where I'm most excited is to have a look at the buys. So let's have a look at those now. Alright, so the company I opened a new position in I'm very excited about is Gamma Communications. Now, I won't blame you if you ever heard of this company, but I work in the telco industry. I've known Gamma for over a decade. I've worked with them, but never for them. Worked with them on many projects. I think they're an incredible company. I'm really delighted that the share price fell by over 20% across a couple of days. Originally, I actually thought I timed the fall perfectly, and then it fell a further 7% after originally falling like 14% after the results were published. Again, I don't really understand it. It does trade on a hefty multiple, to be honest with you, but it's a really, really great company. I think where they are strongest are where the margins are still best. They're hugely automated. They've even got a reputation in the telco industry for being quite aggressive on the graduate recruitment process. People get churned out of that pretty hard. It's just a well-respected, really well-run, forward-thinking telco that has kind of focuses on SIP, hosting, fraud and AI protection, those kind of like high value BSS services, as well as the OSS side of things as well, with the SIP and fixed mobile convergence. So yeah, I'm really excited about this. If you've never heard of them before, completely get it. But have a look at their numbers. Their return on capital is like 40%. For the last 5 years, and again, although they trade on a hefty multiple, I think they're absolutely worth it, and I'm really happy to pick these up. I could have been slightly more patient, to be honest with you, but I wanted this company under 21, so I'm not going to be too greedy. I think it fell from about 23.5, and currently it's at like 19, under 19, so I'm definitely sitting on a reasonable loss at the moment on this. But again, I'm absolutely delighted to have opened a position in such a quality company. So yeah, Gamma. Alright, then I'm going to group these. So we've got National Express here, NEX, Fever Tree, and WH Smith. These companies, I think if you're British, will be very familiar. WH Smith maybe less so, and maybe also National Express if you're American or otherwise. They're free shares that are tied to COVID, and I kind of see why, right? You've got buses, you've got tonics, for mixers. So, they traditionally had a lot of their sales from restaurants and pubs. WH Smith is a travel agent that has a lot of its higher margin shops in airports and train stations. So, I get it. But all three of these companies are kind of still posting really good earnings. Like, I mean, WH Smith hasn't quite recovered to their earnings, mainly because of the higher margin stuff being closed. But I was picking up shares under 15 quid. Like, I think that's great. I've owned WH Smith before. I was buying at 16.50 and I sold out at 19.20. It's had a really overdone pullback. So I'm just building up my stake in WH Smith. National Express is like a medium-term holding for me. Again, its earnings have already recovered to pre-COVID levels, even though their revenue is about 80%. And that's mainly just because they've become a better business over the last year. I think it's really going places. I don't really understand why it's so unloved. And National Express is now actually my second largest holding. I just really think it's maybe even 50% undervalued, something like that. So I've gone pretty big. Fever Tree, I'm almost sad I didn't pick up more when it was under £22. For me, I buy Fever Tree when it's under 23. They produced some pretty decent results, really, and the share price went up 10% in a day off the back of those results. So that's pretty good. I'm definitely green now on my Fever Tree shares, so that's been a little while since that. And again, Fever Tree for me is like a forever investment. I really think it's a great product and a great company that's going to grow over many years. So that's awesome. So these three shares I've grouped together because I think they're being overly seen as COVID stocks when actually they're, although slightly impacted by COVID, they're really great businesses. I don't believe they're in any existential danger, and for me, it's just a great chance to pick up some medium risk, medium holding plus shares here. So very happy with that. Bristol Myers, I think this is a well-known shares, whether you're in America or the UK. I was buying 5 to 10% higher than the share price now. 61 for me is a good buy price. I mean, I'm not really sure what to say. At current levels, it's yielding almost 3.5%. It's still got exclusivity on its Celgene acquisition for another 5 years, and it's got a good-looking portfolio of drugs coming up. So I'm buying a lot of that as well. And Kaki here, I think this is less well known. This is something I've spoken about beforehand. This is sort of an IT meets defense contractor meets civil contractor for the government kind of company. It does a lot of intelligence support and those kind of things, but it constantly picks up like 8-figure contracts regularly. It's not a particularly big company, but it's just very cool. Basically, it's kind of a bit like Palantir, but less hyped. So it's relatively small, especially by US standards, and it doesn't pay a dividend. In fact, it's very clear that it never plans to pay a dividend. But for me, I just think this is a cool company. And when it dipped under 252, I decided to actually free up some money to buy a bit heavier. I had been like dripping money into Kaki, but I actually bought 6 shares under 252. And then another 2 shares just above it, so I'm pretty happy with that as well. So yeah, quite a lot of movement. You can see here 16,000 and an 85,000 portfolio. So about 20% of my portfolio was traded over the last couple of weeks, so pretty significant actually. But yeah, in order to fund that, you saw I only added £1,000 of capital. So let's see what else I sold in order to fund it. All right, so let's have a look at the shares that I sold. I'll start with the 4 that I sold fair chunks of, just basically to free up money. I still like them. So I'll start with Huntington Bank shares. I sold 500 out of 600 shares in this, between 15.30 and 15.50. The main reason for that is just because I wanted the money for National Express and Fever Tree, and also I'm fairly heavy at the moment in financials, just because I have large positions in several UK insurers. But I still like the company. I think following their acquisition, it's basically an S&P 500 mainstay now. So yeah, I like it. I plan to add back into them on anything under $15. I think it's worth $17 plus as a share price. Genius Sports here, this is one of my riskier holdings for sure. I sold 50 in the week before this report, and I just sold another 199 of my remaining 200. About $21 is an average sale price. It's been all over the place. I think if those shares are probably worth in the low 20s, but it's difficult for me to value such a company like this. I'm definitely not an expert. So I decided to crystallize what was a pretty decent profit, over 20%. And again, just free up some money for things. I will definitely buy more Genius shares if it's under 19, probably is my inflection point. But yeah, so I've kept one share just to keep a decent eye on it. Amazon here, I sold a quarter of my holdings, so that was half a share. Again, just to free up some money. I think Amazon is still probably about 10% undervalued, arguably one of the more undervalued big tech stocks out there, especially if you compare it to the likes of Microsoft or etc., which has been on a tear at the moment. So again, yeah, I like Amazon. I will pick up more Amazon under $3,300. We'll see. I think when I sold it, it was 34.5, so I picked up like a 6% profit or so on the share, or part of the share that I sold. And then Huntsman Corporation here, this remains my largest holding even after I sold 10% of it, so 70 of my 700 shares. I had gone really hard into Huntsman when it dipped into the $24 previously. I sold these 70 shares at like $26.50, $26.20, something like that. And again, here this is purely to free up some money, as well as arguably to balance my portfolio. I mean, I've still, even after this sale, I've got like 14% of my portfolio in Huntsman Corporation, and I still think it's really undervalued. But again, other things were more undervalued, and I really wanted the money, so there we go. Anto here, I've been swing trading almost. This is the third time I've bought and sold Anto. This is a copper miner, UK listed Antofagasta. Again, I just felt like other things were more undervalued, and I took a 2-week turnaround, 5% easy money. So fine. AbbVie here, I called this accidental swing trading. I picked up some shares after the FDA caused the share price to drop. I sold out for a tiny profit, like £3, tiny profit, so really small, just because I decided I wanted to buy other things, primarily Gamma, as I've just spoken about. So again, fine. I do think in general, pharma is quite undervalued at the moment, especially in a fairly expensive stock market. So AbbVie, Merck, BMY, even J&J arguably is starting to approach value territory for such a quality company. So I would definitely consider, and I'm also fairly light on pharma as well, even after picking up some BMY. And lastly, here's Disney. Now, this one may be a bit controversial. I still think Disney is a very expensive stock, but I decided that I just wanted a position in it for the long term. I think it has the potential to scale very well. Once it gets everything up and running again, it's going to be a formidable. It's just, you can't doubt the mouse. However, in the UK, we have £20,000 per year tax efficient ISAs. So I have one and my wife has one. And I just decided that Disney, probably alongside Microsoft as well here, where I sold my last tenth of a share out of the ISAs. I'm not going to have these shares in my ISAs. I'm going to have them outside of it. So, when it gets to the position that we're able to fill up our ISAs, then I think these are good stocks to have outside of it. So that's my thinking, basically. I haven't been in Disney for a particularly long amount of time, maybe a month and a half, so 4% profit here is reasonable. And I will be buying more Disney once I start adding more capital into the other side of the investments. So basically my personal ISA and personal investment accounts rather than my wife's. And Gamma here, just in case you're wondering, I guess I'll mention this one as well. This was really just for rounding. I'm slightly OCD. When I get to a point where I'm happy with my holdings, I basically just stop all the decimal places, and just basically have a whole share. So I got rid of the decimal, and that was the reason for that. So yeah, pretty active this week. This is the most active, I guess, fortnight that I've had for many months. But the stock market was doing weird things. I tried to take advantage of it. I'm actually really happy with the moves I made. Even though I could have been slightly more patient with Gamma, picked up some, good value as I see it. And although selling some of these things, I think especially Huntington, because I do still think it's undervalued, was a little bit painful. I just think National Express is just so undervalued, and they were both in the same ISA, and like I say, that ISA is already full up, so I couldn't inject more capital, even if I could, even if I wanted to draw down on savings. So that's the decision. Anyway, slightly longer than normal. I try and keep these under 10 minutes, these weekly updates, but it is 2 weeks, so you get a 2-for-1 15-minute jobby. But yeah, thank you very much for investing. Hopefully that was useful. Any questions, I try and keep an eye on the comments. I've been the Boss Hog, and good luck with your investing. Bye for now.